Hi everyone, welcome to this Forex training tutorial, and I'm Calvin, and today I'm going through this Forex breakout strategy with you, okay, which is one strategy that I personally love to use, and in fact I often introduce it to my blog readers, okay, who are new to trading. The reason because it's very easy to execute and it's very easy to identify. Okay, so maybe let's go through this strategy now. Okay, so first of all, let's go through what are breakouts. Okay, the breakout is basically the sudden surge of price in a particular direction after a period of sideways movement or something known as a consolidation. Okay, so when you look at this picture here, you find that the market is making very tiny so-called small candles. We'll say small candles, can you see that? Small candles. And this period is known as the consolidation. Once the consolidation is over, can you see that the price suddenly make a long candle, long candle, long candle, and it start to move up? This is what we call a breakout. And this is what this strategy is going to do. We are going to trade this breakout. Okay, so before we are able to trade this breakout, we need to know what basically constitute a breakout. And one of the best way is by using a candlestick pattern. Okay, and there are three candlestick patterns that I love to use, and let's go through them. Okay, the first candlestick pattern that I love to use is the trend channel. The trend channel is in fact a very reliable breakout pattern, candlestick pattern. And can you take a look at this picture here? You see I draw two trend lines. One is the resistance trend line on top and one support trend line below. And can you see that the market is moving within this trend channel? You can see that it's moving within this trend channel. Up, down, up, down, up, down. And once it breaks out of this trend channel, it becomes a breakout trade. And we'll go to enter a long trade and we will profit from the up front. Okay, the trend channel is one of a very good candlestick pattern for breakout strategy. Okay, besides the trend channel, I also make use of triangles and flag. Can you see triangle? Triangle is also another sign of consolidation. Can you see that? You see I draw two lines, one resistance trend line, one support trend line, and can you see that the price is moving within this triangle pattern. And can you see this red candle? The price break out of it, come back to retest the triangle and start to move down. Imagine if you are able to enter a trade at this point, you'll make a lot of profit from this one. Okay, so besides the triangle pattern, we also make use of flag. Okay, and the flag pattern, you can see like a flagpole. It must have a long candlestick which resemble a flagpole, followed by a period of consolidation, flag, before it start to break out. Okay, so these are three candlestick patterns that we'll be using to trade this breakout strategy. And basically to further enhance our entry, we need to make use of certain Forex indicator or technical tools. Okay, for this strategy, we'll be using three technical tools. One is the Bollinger Band. Okay, the Bollinger Band. You just have to use the default setting from your brokers, from your trading platform. By default setting will do. And can you see I actually have on this picture here, you take a look at this Bollinger Band, the red color line and the blue color line. See that? This is the Bollinger Band. Okay, so what we are looking for using the Bollinger Band is look for the narrowing of the band, or some people call it the Bollinger Squeeze. And once the Bollinger Band is getting narrower and narrower, it actually represent a period of consolidation. And can you see that it starts to widen here? And this is what we call a breakout. So besides the Bollinger Band, we will be using support and resistance level, like the trend line, Fibonacci level, you can also use that. Okay, and lastly, we'll be using the indicator known as MACD. The MACD indicator is one of my favorite indicators. If you have been reading my blog at forexindicator.org, you find that I often introduce a strategy with this MACD indicator. It's very versatile and it's very reliable. You can do a lot of things if you really know how to make use of it. Okay, and for this breakout strategy, we'll be using MACD indicator. Okay, so now that we know the technical indicator, we will go through the steps to trade the Forex breakout. So first of all, there are 5 steps here, and if in the case you need to copy this now, maybe later on you can replay this video and pause at this slide and just copy down the steps. Maybe in the future I will just send it to those of you who have subscribed to my newsletter on my blog, okay, so that you don't have to copy down all the steps. You can just print it out or just memorize it later on. Okay, so first of all, we will set up the following indicator, the Bollinger Band and the MACD. just default setting for a Forex platform. Don't worry about the setting, just default setting. Okay, next we'll draw the necessary trend line, which is just not the line that I draw. Just remember, okay, the line that I draw here. Take a look here. These are the trend line. These are the trend line. Okay, these are the trend line. Okay, so to identify area of support and resistance, and if your trend channel is better still, you can just draw a two horizontal line. You got a trend channel. Okay, so once we have this support and resistance identified, we'll take a look at a Bollinger Band. We'll wait for the Bollinger Band to get narrower and narrower, which is what we call the Bollinger Squeeze, as it actually showing you a consolidation in progress. Do note that the squeeze, if it happens over a longer period of time, the breakout will be larger. The longer the squeeze, the greater the breakouts. Okay, so you got to remember this. So once the price produces a sudden movement in a particular direction, and you see the Bollinger Band actually start to widen, you should now take a look at the MACD indicator to see if the histogram, the bar, actually flips up. If you are going long, if the price is going upward, you should see the MACD histogram flipping up. And if you are going downwards, the short direction, you should wait for to see where the MACD indicator, the histogram, should flip down. Okay, don't worry about this. In the next slide, I'll have an example and I'll show you what I'm talking about here, the MACD flipping up and down. Okay, and do note that you should always wait patiently for a proper trend line break. It's very, very important. Failure to do so will lead to loss of money. Okay, basically because fake outs is something that is very common in breakout strategy, which is the fake movement of the price leading you to think that, oh, the price is moving up, but once you enter a trade, you actually move back down to stop you out. Okay, so do note that you should always wait for a proper trend line break before you enter any trades. Okay, so let's go through the example on the next slide. So can you take a look at this example here? Okay, can you see I draw a trend channel, a resistance trend line, a support trend line. Can you see that? And I put a circle here. This circle here is trying to show you an area called the Bollinger Squeeze. Can you see it's very squeezy here, the Bollinger Band. You can see it's very squeezy here. And once the price start to move up, can you see this candle actually break above the resistance trend line. Okay, so we'll move down to see our MACD histogram. Can you see that it start to flip up, and this tells us that okay, it's a confirmed breakout, and we'll enter a long trade. Okay, we'll enter a long trade. Okay, and once you enter a trade, you can place your stop loss maybe 20 pips below the trend line, or 30 pips depending on the volatility of the pair you're trading. If you're trading the pound yen, which is very volatile, maybe you need to place a stop loss of 30 pips. And if you're trading something like less volatile, you can just put maybe 20 pips or 15 pips. Or there are trades where I will put just 15 pips and it works. Okay? But do remember, it's very important. You need to make sure that it breaks up and you got a histogram flip. It's very, very important. Okay? Let's take a look at this part here. Can you see this part here? At the point where this candlestick is formed, right? Can you see? It looks like a breakout. Can you see it looks like a breakout? But eventually it retrace and move back. If you enter a trade here, you'll be stopped out. Can you see that? Okay? The reason why I will not enter a trade, can you take a look here? Because the MACD histogram is already down. It did not flip. Can you see? It's already down. All the while it has been down. There's no flipping movement. Something here, take a look here. You can see that it's actually flipping from down to up. And this is where we enter a trade. Okay, so MACD is a very good tool for confirmation of trend line break. Okay, basically this strategy is just this. You just have to take note of 5 steps, and it's pretty simple, easy to identify. One disadvantage is that the breakout don't always occur, and maybe you have to wait for a period of time before you have a squeeze or consolidation, and then you can trade the breakouts. Okay, I hope you benefit from this tutorial and you like the tutorial. Okay, if you want more Forex information, you can just visit my blog at forexindicator.org, where I write blog posts about twice a week. Okay, I answer your my readers' question, and you can just subscribe to my newsletter for more Forex tutorial as well. Okay, to stay tuned, you can subscribe to this channel, and I'll be adding more videos soon. Okay, so talk to you guys again.